How to trade derivatives like a pro on OKX. Futures and perpetual swaps are two of the most common types of crypto derivatives. Let's take a deep dive into what they are, the risks involved, and how to trade them on OKX. A futures contract is an agreement between two parties for the sale of an underlying asset, such as Bitcoin, for a specific price on a date in the future. Buyers can go long by buying a futures contract and will profit if the price of Bitcoin increases. Or they can go short by selling a futures contract, profiting if the price drops. Perpetual swaps are similar to futures, but they have no expiry date, hence they're perpetual. Now, because there's no settlement date, neither party has to close their position. Instead, they can keep a position open as long as their account holds sufficient balance to fund it. Now, let's look at where to trade crypto derivatives. From the OKX app home screen, tap Trade. Tap the top left ticker to open the search bar, then tap the top right switch icon and select Perp or Futures, depending on the derivative you want to trade. Okay, so let's look at futures first. To trade futures, simply tap a contract from the list. OKX supports futures contracts for various crypto assets that settle weekly, bi-weekly, quarterly and bi-quarterly. Each contract is named using the asset's traded and settlement date. Remember, perpetuals don't have expiry dates, so all you have to do is select the underlying contract you want to trade. Then choose either crypto margin or USDT margin. Margin refers to the currency amount required to be deposited as collateral when you open a futures position. Crypto margin uses the underlying crypto as the margin and settlement currency, whereas USDT margin uses your USDT balance for margin and settlement. Now choose a margin mode. In cross-margin mode, all trading products settled with the same currency can share the same total margin, meaning profitable and losing positions can offset each other. In isolated margin mode, each position's risk as well as the profit and loss are kept separate. Leverage refers to the amount of exposure you wish to get on an asset. For example, with a 2x leverage long on Bitcoin futures, should the price of Bitcoin go up by 10%, your position value will increase by 2 times 10%, 20%. Conversely, should the price of Bitcoin decrease by 10%, your losses will also be amplified to minus 20%. Okay, so when trading on leverage, do pay close attention to your margin ratio. Should your ratio drop below a certain threshold, your position may be liquidated. We recommend starting off with very low leverage to decrease your risk of liquidation. Before you place your order, select your leverage amount, order size and order type. Then tap Buy to enter a long position or Sell to short. Scroll down from the contract screen and tap Positions to view your open orders, positions, margin ratio and P&L. To exit a position, enter your desired closing price and quantity to close, and then tap Close Long, Close Short. So there you go, now you're all set to trade derivatives on OKX.